evening. Welcome to Options Center. It is Tuesday after the bell, 3/16/21. Feeling much better, you guys. We are ready to rock and roll. This market seems invincible. It's heading straight to the upside, but I'm looking for a pullback at this time. We are going to go over the options expected move that we have in these charts here that we hand draw. We're going to put some lines and Elliott waves on the screen. We're going to go down to the 65, and then we'll check out some trade ideas at the end and see what we did for this morning. Okay, so if you're interested in this information, stick on this channel, watch this whole thing, hit that like button, go down to the bottom right hand corner and hit the Options Tender logo and subscribe. All right, appreciate you being here. Let's get into it. This is the SPX. The options expected move, we draw that in every Friday evening for the next week to see what our playing field is for the week. We are moving off of the center point, which is where we start the week. And this week we're moving up either 74 points to the upside or 74 points to the downside. We started moving up right off the bat. There is nothing, especially with Powell speaking tomorrow, that says we can't hit the bottom edge. And that's actually kind of the way I'm leaning. Even though I'm bullish, we could hit both sides. We can't predict. So after and during Powell's speech, he may be speaking and we spike up to the top, only to the correct all the way to the bottom. There's no telling. So we're playing both. So here we go. Let's put on some trend lines here because trend is our friend. We are down to wave 4. We're finishing 4. We're up to wave 5. I think this may be a new wave 1. Up here, and we need to pull back for a wave 2. And that's what we're kind of playing. That's what our playing is. I got out of a few calls today, had a few beautiful plays right off the bat from this liftoff, and we're looking just for a pullback, maybe a 61.8 retracement. So we have the 8 underneath us. The 20 is right where this fuchsia line is. And the 50 is down here. So anything could happen after the speech tomorrow. And the reason why the speech, I don't go into too many fundamentals, but the reason why the speech is so important, because it affects bonds. And bonds are going to affect this and affect that. I'm not going to get into it, but ultimately the market follows along. So let's go to the 65 on the ES. And let's put the board on. Here we go. All right. So this is our wave 1 that we've been working on. I'm not sure that it's actually over yet. I have a 3 up here because I can't quite get this countdown. 1, 2, 1, 2, 3, 4. And I feel like this is the rest of wave 3 here. And we should be working on wave 4 next to go higher, which would take us to the upper expected move. But I'm not sure that that's going to happen with the FOMC. Price gets erratic, and you're not going to be able to tell what's happening usually. It goes really fast. We'll spike up, hit whatever target it need to, and then just dump or complete opposite. So we're not going to try to predict that. Okay, just know that we do have targets on the upside and downside, so we added on some plays. Let's go straight into it. Let's go over MS. So MS, the reason why I picked Morgan Stanley, I just happened to notice that it had a wave 1, 2, 3, 4, 5, and we used an in-out spread. I use that type of play. I'll put a link on the video. Whenever I'm playing a reversal, it gives us time. It's 31 days out. It leaves us very little room for error. So even if we travel it up a few more days, actually a week or two, we could still dump, and Morgan Stanley would work out perfectly. So I'm looking for that 61 or 50% retracement at least. Okay. Next play, and this is kind of a hedge because I still have calls on you. Okay. And the SPY. So we're choosing the SPY as well. I put on 2 in-out spread, SPY put spreads. And that same thing. If we're getting up top here and we're just pulling back for a wave 2, that's the perfect play for it. But if we move higher before we pull back, that's fine too. Either way, I'll win. I'll win on that. We just need the pullback. That's the key. And we did the same thing on the QQQ. And I think the QQQ, I could have actually used a swing trade, but I used the in-out spread as well. I've been using those so much. It makes life so much easier. I don't have to monitor it. So we had our wave 1 up, and I'm expecting wave 2, and we're right at resistance right now, so it'd be super convenient. And also there'd be inverse head and shoulder, which I think tech is going to remain strong, and we need that pullback for it to get up higher. All right, in the plays we had earlier today, FLGT, we didn't have any follow through with our gap up. So, but the actual setup, the inverse head and shoulder, is still there. It looks amazing. Now, if the market pulls back, maybe it doesn't break out yet, but we're holding over the 20 MA, the 8. We pushed back off the 8 MA when we closed the gap, and off the 50. So this is looking really hot. I might jump back into this game. I took profits because I was in it on the right shoulder forming at about, I don't remember, 99 or, and we gapped up to 112 and I took profits. Aapl, we got in on this and right after the minute wave 2. And so we're already out of this one. We made enough on this trade in the last 2 days, including the 2 gap ups. But Aapl's looking pretty good over the 20 MA. We broke out of the wedge. Might need to pull back just a hair because of the resistance here in the doji. Maybe we see a couple days of consolidation before moving higher. So Aapl still looks good. Even though I got out of the trade, Aapl still looks really good, especially if you're doing those in-out spreads or swing trades. Give yourself some time on those trades. Okay. All right. That's it. That's all I got for you. Thanks for joining us here at Options Tender. Hit me up on the comments if you want to see something specific or if you have any questions. I'm a full-fledged technical trader. I don't really look at fundamentals. I know that that's such a huge thing with the brand new traders that are out there. But just know that either way is okay. It's just when you're a fundamental trader, you have to slow down just a bit because the technicals drive things until the fundamentals catch up. So thanks for joining us here at Options Center. We'll see you in the morning.